Hello, I'm David Jones, and I thought, as it's that time of year where perhaps some of us have spent far too much time with our family so far and we need a bit of a break, what we all want is a video on trading, strategy, education and markets. So I thought I'd put one together. It's quite a bit to cover in this one. I want to look at some interesting and popular markets for over the next couple of weeks, some trading opportunities there. I'll do our 2023 outlook at the beginning of January. I'll tell you about this fantastic podcast that I found and listened to over the last couple of days. Some of you may know of it already, but an absolute brilliant couple of episodes on a hedge fund blowing up and a great lesson about why, as we all know, risk control, absolutely critical to trading. I'll catch up with some of my trades over the last month. I actually had my biggest winning trade for this account I've been trading. I'll talk more about this just before Christmas on the S&P. So I'll talk about why I did that trade and other trades that I'm looking at. And we'll touch a bit, and it does tie in, I think, to my own trading. Why do people lose? We know that people lose when it comes to trading. They make the same mistake time and time again. So perhaps let's start off with that. One of the biggest reasons that people lose money trading, and if you look at the stats now, for UK regulated brokers, they've got to say what percentage of clients lose money, and it's typically in excess of 70%. That is never going to change, I don't think. I won't go into one of my rants about how there is a whole bunch of people trading who shouldn't be trading, but I think, as human beings, we're not particularly well wired for trading. So the psychology does absolutely play a part here. But if we look at the raw numbers, the reason why people lose is their winners are smaller than their losers. So if they make 100 quid on a trade, they'll go on and lose perhaps 150, 200 pounds on a trade. And fighting those sort of maths is really hard. And again, this does come back to psychology. There's always the temptation to snatch at winners. Let's say you're up 50 pounds on a trade and the market starts moving against you and now you're only up 35 pounds. I think the knee-jerk reaction is to panic and think, right, I've got to take that profit quickly before the market takes it away. And if a trade moves against you, I've spoken to plenty of people just this year who, if a trade moves against them, they may have a stop loss, but they'll move that stop loss further away. So they're increasing their risk. So our psychology is very badly wired for trading. As I said, I've been running this trading course now for almost a couple of years, and I've been running this account with £4,000 since October that I've talked about on the YouTube live streams that I do every Friday. And the reason I chose £4,000, it's a real money account. Some people might want to trade with more, some people might have less money to trade. The basic principles are still the same. But for me, £4,000 means my risk per trade, because I'm risking 2.5% of my account, my risk per trade is £100. So the maths is really easy for me. So I've been running this account, showing the results since November, I think. And the best month so far was December. I'll flash up the numbers now, but in the 30 days to the 22nd of December, the closed profits over those 30 days were £936. So that was up 23% over that period, over that 30-day period. 68% of the trades were winners, which I think is an unrealistic success rate. I keep saying this and I keep expecting the number to come down. It hasn't so far. I do expect that number to come down a bit though. So I think 68% of winners longer term is unrealistic. For me, typically it runs to 57 to 60% on average of trades works out as winners. But it does show how I trade my approach. So I added a short-term trading module to the course in October, and that's why I decided to trade this approach. I'm going to trade it for 3 months just to show how it would have worked out. Over the last 90 days, to give you the number there, it's up 1,551, which is up 38%. Much bigger numbers than I was expecting. Obviously, I was expecting it to be profitable, and I thought it would be an interesting story to tell and to come back to it, but I didn't quite expect it to be as profitable as this. And I don't think the markets have been that extreme. I have to say, of course, that past performance is not a guarantee of future performance. But for those of you who are on the course, you'd have seen me trade it during the course, and you'll understand the trades I've done when we dig into them in a second. A quick promotion, if you'd like to join the course, I'm running a 20% discount to the end of the year. The details are below. The voucher code is YouTube. And if you go to jonesthemarkets.com, you can see more information, sign up for the course, all of that. Right, before we get into looking at some of these trades and the markets, let's talk about this podcast that I discovered over the last day or so. So it's called The Acid Capitalist. So some of you may well be familiar with it. It's run by Hugh Hendry, who is a famous British and Scottish hedge fund manager. And the episodes that I listened to, there's 2 episodes, absolutely fascinating, from the beginning of December, covering the blowing up of the Three Arrows Capital hedge fund. Fascinating story. Gets perhaps a bit technical now and again from a crypto point of view. They started off doing foreign exchange trading, were really profitable doing that, and then got involved in crypto and were trading also with FTX, of course, another recent high-profile headline casualty, but interviews the principal of this fund. And fair play to the guy for going onto the podcast, because there are times when Hugh Hendry absolutely is not pulling any punches, and it's a little bit cringy. Some of the questions he was asked, you did really feel for the guy, who'd seen his hedge fund go under. But an absolutely fascinating podcast. I listened to it at a 5-hour car journey. I listened to both episodes yesterday, but a great reminder of how it can all go wrong if your risk management is not what it should be, or perhaps not there at all. So it's The Acid Capitalist. I think there is a YouTube channel you can watch it on. You can get it from your normal places you get your podcasts. I'll put the links again in the description down below. But if you've got a bit of time over the next few days and you want to settle down with a box of Quality Street and listen to a good podcast, I highly recommend that. Right, let's get into it though and take a look. Take a look at some of these trades over the month. And I want to highlight particularly the big winner, the S&P trade, and talk about some of that, and also look at some of these markets. We'll take a look at S&P, oil. I've got a trade on silver at the moment, and also where I think there might be some other opportunities in the next couple of weeks. Let's have a look. So let's start things off just by looking at the importance of having big winners. So this is the account that I've been trading. It started, I think, with perhaps a few £100 more than £4,000 at the beginning. It's currently at 5,900. That's the account, real money, my account. There is one open position at the moment. We might come back to that. So I've got one trade on silver, which some of you may know is historically a market I've hated, but I've been long silver since just before Christmas. Not much going on with that at the moment. But let's take a look at the history. So we look at the last 30 days, and what I'm going to do, I'm showing you that there are holding costs, again, just to show it's a real account. But what I'm going to do, I'm going to filter it by stop loss type. So you'll see all the closed trades. I'll filter it by stop loss. So all the trades that I come out of, whenever I come out of a trade, I come out of it on a stop loss. And the last trade I came out of was the 22nd of December, 7:15 in the evening on the S&P. I've been short the S&P and came out for a profit of £319. And let's not forget, my risk per trade is £100 risk per trade. So if I come out of a trade and make, in this example, almost £320, it means that even if I have 3 losing trades next time round for £100 loss per trade, I'm still in profit overall. Okay, I'm only £19 in profit, but it does show you what a difference the big winners make. It's perhaps easier if I show it on the spreadsheet I keep for my trades, but if we go down a bit, the other big winner was the 13th of December. Coincidentally, again, the S&P made £246. So again, 2.4 times the risk. You can see the ones that get stopped out for a loss are typically around £100 or so. But let me show you on my spreadsheet. So here we go. This is my trading spreadsheet. For those of you on the course, you know how important I think keeping records are. So this is the records I kept of this trading approach on that account from the end of October. And the big winners make so much difference. Back in November, oil. There was an oil trade that made £247, so 2.4 times the risk. There was another oil trade, coincidentally, that made £233. The losers, you can see, are around £100. And then again, there was the big winner. Here we go, 12th of December, that S&P trade for 247. and the one on the 21st of December for 319. The silver trade I'm still in. That's currently up about £30, not minus 10. But that's what the P&L looks like. So for me, it's really important to chart your P&L, to treat your P&L as a trend as well, because clearly it's not going to go up in a straight line. But as long as it's trending in the right direction, for me, I'm happy with that. And I'm probably due a run of losing trades, particularly given the success rate at the moment. I'm sure there is a run of losing trades around the corner. I had a run of 3 losers, you can see here, from the 29th of November, 3 losers on the trot there. But the idea is, that our losers are an absolute set amount. I don't move the stop losses. And then when a trade is profitable, I try and run that trade for as long as possible. Let's take a look at that S&P trade that made the money. So I entered the S&P on the 21st of December. Let's bring the chart over. So I went short the S&P here. So it was between 5 and 6 p.m. my time, UK time, on the 21st of December. I was in two minds about taking the trade because I thought, well, it's a couple of days left till everything absolutely stops for Christmas. Is this a sensible trade to do? But I thought I'll do the trade. There's still, there was still half the session left on Wednesday. There was a full session left on Thursday. So I thought it's a fair enough trade to do. For those of you who are on the course, you'll know exactly why I did this trade. The market had made a new low for the trend yesterday. It had rallied up, but, and you know the setup, that was the setup. So my stop initially was above 3,900, went short, as I say, between 5 and 6 p.m. And if we move forwards, nothing much happened. The market had moved against me. So by the next day, so early hours on Thursday, the 22nd, I was underwater on the trades. But, I had my stop loss in place somewhere above 3,900. So as usual, just quite happy to sit it out. And then as Thursday went on, we had this massive sell-off. Now, it doesn't happen that often. It would be brilliant if all trades worked this way, that you just get this succession of hourly candles. And as the market was moving in my favor because I was short, all I was doing was trailing the stop loss down. Then I eventually got taken out on this big candle the next day between 7 and 8 p.m. The next day. So when markets move like this, and as I say, it doesn't happen very often, of course, it's a dream trade because all you've got to think about is managing the trade. And for me, managing the trade when it's moving like this is just about trailing the stop loss. I don't know how far the market's going to go. I did not expect it to basically, sell off and take out the lows from a couple of days earlier in the space of a few hours. So it worked out to be an absolute great trade. But with trading, you do have to try and put yourself in a position where if the market does move like this, you're going to try and capture as much of that move as possible. And of course, what people do is they panic and they see a market. Because of course, if I flip this over to something like a 10-minute chart, so now we're looking at the Thursday again. It did sell off, but we did have, a bit of a bounce and a bit of a bounce here. So plenty of people will get a bit freaked out and spooked by the market bouncing and snatch at their profits. But if you can sit there and ride the trade out for as long as that trend continues, and no one knows where the trend is going to go, it can make a massive difference, to your P&L, as you can see here. If I look at the P&L for closed trades in December, so I ended November up 580. At the moment when that S&P trade was closed, the account overall since beginning of November is up 1438. So that the closing of that S&P trade meant I was up by about £860 for the month, and that S&P trade contributed a significant chunk of that, more than £300 of that profit. So, a lot of trades will be neither here nor there. You can see here, for the gold trade I did in November, made £42. There was a Bund trade that made 60. So it's all a bit scrappy, but it's managing the risk and hanging on for those bigger trades that really made the difference. If I show you the silver trade, so I'm back on the platform now. So I'm in the trade. You can see the little blue arrow there. That's where I bought it. Unfortunate. In hindsight. So I bought it and straight away the market moves against me. It doesn't happen all the time. It's quite rare, but it happened in this instance. So I was really underwater on the trade pretty quickly. So that was 22nd of December. 1 o'clock in the afternoon. By 7 o'clock in the evening, there's my stop loss, the red line down there. The market had come close to my stop, but since the markets have reopened following Christmas, so far at least the trade is slightly ahead. But for me, because I'm only up a small amount so far, as a percentage of the risk, my risk on the trade, as with all these trades in this account I've been running, is £100. I'm up about £30 or so at the moment on the trade. So there's absolutely nothing for me to do. I need to be patient. And if silver doesn't do much over the next few days, I'll still be in the trade in the new year. And I'm quite happy to wait it out and see what happens. Maybe this ends up being the next big winner. Maybe I end up getting stopped out at a loss. But overall, it doesn't matter. One single trade doesn't matter. Let's take a look at some interesting markets. Let's kick things off with the S&P. There's not a lot going on here. This trend, we look at this trend regularly on the live streams. As of the last few days of 2022, that trend is still down. Not too much for me to get excited with down here. Maybe we'll see a bit of a rally into the new year. We've got big lows down here at 3,500. We've got a lot of resistance at 41. The market's at 38.50 at the moment. Not too much to say for the S&P. It will, as ever, be an interesting year to see if it can finally crack this downtrend. So it will, always one of my favourite markets to watch. But not too much has changed over the last couple of weeks or so. Let's take a look at oil. Talking of downtrends, here's oil. So oil, we saw it peak for 2022 on the Russian invasion of Ukraine, up around 125, 126 a barrel. And here we are trading at 80. That trend, which I'm tracking since June of this year, has been down. For me, at the moment, this looks like it's gearing up for a short selling opportunity. Okay, so the market, is pushed back up. We've got quite a bit of a problem coming in just above $83 for oil. I think this is an interesting market to watch over the next couple of days and into 2023 to see if we see the sellers come back out again. I think if it breaks 83 properly, we've got another interesting setup for January as to whether we're going to see a much stronger recovery for oil. But for now, we see rallies. We know it's a volatile market, but that trend is still down. And that resistance from right at the beginning of December, 83.27, still very much in effect. So for me, at the moment, absolutely be leaning towards being a seller rather than a buyer on this medium-term picture. You take a look at gold, always a popular market, the price of gold. I think we've been in recovery mode and trend reversal mode over the last month for gold. Nothing really to change my opinion on that. I'd much rather have a deeper sell-off from where we are now to really test how convinced the bulls are for being a buyer of dips. But we've seen during December, 1760, 1765 be good support for gold. In December, it has briefly moved to a new high for this recovery off those November lows. So for me, absolutely still a buyer of a dip for gold. I'd rather see a bit more volatility though to make it interesting. And finally, pound against the dollar. I think this is perhaps, for me at least, with my approach, one of the more interesting markets now at this moment in time, because we've had the breakout of this downtrend that's been in place, had been in place since at least January of this year, early Jan, mid-Jan of 2022. And then we've seen this go through the trend line, break some big levels on the way up, and middle of December, the pound against the dollar trades to its best levels since June. So we saw that 6-month high pound against the dollar. It's come off since then. It's dropped back about 400 points since then. But I think this whole area here from about 119 through to that most recent low, 119.92, is a really interesting one. So for me, I would be quite interested to see, it's week today, how does it perform for the rest of this week until the new year? Do we see the buyers come back in again in this 119, 120 zone? So I think that's a really interesting market, for me at least, to watch over the next couple of days. So plenty going on. For me, from a trading point of view, is there a trade I do on this now? If I flip it back out to the hourlies, there probably isn't. But again, going back to my course, and I'll just flash up the contact details, where to go to find out more about that. I'll do a quick plug on the chart and the YouTube discount. For me, for those of you who are on the course, I don't think there's a trade really setting up yet from a short-term point of view, but perhaps an interesting trade if you were so inclined. If I saw a bit of strength coming in on this hourly chart, I could be tempted to be a buyer, bearing in mind, between Christmas and New Year is an odd time of year. 119.90, that's the low from the 22nd of December. The market did manage to rally about 100 points or so. Are we going to see that 119.90 low hold again? Let's see. I would still be tilting towards the trend on this hourly chart is still down. But if there was something to watch over the next day or so, for me, it is pound against the US dollar and whether 119.90 holds. I think if that gets lost, the risk is we're looking for a bigger sell-off, perhaps down to the end of November lows at 119. But I think that's an interesting market to watch. Clearly trying to have some sort of recovery. It's been smashed pretty much today, at the time of recording on Tuesday, the 27th of December. Let's see how it works out. We'll look at all of these markets in a lot more detail in the normal YouTube live streams, which will return next year. I should also say, if you want a copy of this spreadsheet, for whatever reason, of the trades done so far, then send me an email. I think you can get in contact with me via the website. Drop me an email via my website and I'll happily send you a copy of this spreadsheet if you want to take a look at it. I don't think it tells you too much, really, but it shows you the trades done as part of the trading course over the last couple of months. That's it for this in between Christmas and New Year video. I hope you found it useful. Absolutely check out that podcast if you haven't listened to it. Well worth a listen. Those 2 episodes on Three Arrows Capital. The percentage of losing traders, as I say, is never going to change. I don't think. I've been trading for 25 years, worked in the trading industry for almost 20 years, and you see the same mistakes. Mistakes perhaps isn't too strong or isn't strong enough a word, but the same things being done time and time again by traders. If you'd like to find out more about my trading course and sign up for the course, I can't promise you the same sort of returns I've had over the last couple of months, but I do think it will help you make a better trader and look at markets in a different way, in a different way to all of those people who lose money or struggle to string consistent profits together. Go to the website, jonesthemarkets.com, use the voucher for a discount. And I think that's it. So all that's left for me to say, thanks for watching. And as usual, good luck with your trading. And I'll be back in January 2023 with the regular live streams on a Friday.